Good morning, everybody. Welcome to the Moving Markets Podcast. It is Thursday, January the 22nd, 2026, and the stock market has been open for a little bit more than an hour and a half. I'm recording this a little after 9 o'clock Mountain Standard Time. And what that means is that there's still a lot of trading left today. As you're well aware, if you're a daily follower of the podcast, we did not do one yesterday. I'm a couple hours north of my office, close to Salt Lake City. I'm up in Logan, Utah, where my son and my daughter-in-law just welcomed their third little girl into the world a couple of mornings ago, or a couple of evenings ago. And because my wife and I are as close as we are, we quickly, came up and are here to help them out and do what we can, mostly taking care of our two older granddaughters so that the new mom and dad, or third time mom and dad, can focus more on the brand new baby. So I didn't do a podcast yesterday because I was alone with my two other granddaughters for a while. My wife was at the hospital with my son, my daughter-in-law, at the time the market closed yesterday. So I'm doing one this morning, and I may or may not also do a second podcast today around the close of the market. I haven't decided for sure yet, so just hang tight. This might be the only one today, but you might get a second one at the end of the day today. More than anything, really quickly, right now, as you can very well see on the screen right now, if you're watching instead of just listening, Dow Jones up over 400 points right now, the S&P up 42, and the NASDAQ up 205. Those are all somewhere between 2/3 and a little over 0.75% to the upside. Good, strong, solid day, especially on the backs of the really ugly day that we had on Tuesday. So here's a chart let's get the chart of the S&P 500. You can see last week, Friday, we had a little bit of a sell-off on Friday. Not real horrible, nothing real awful. But then on Tuesday, the markets were closed on Monday for the holiday. On Tuesday, the markets opened and just went down, and it just kept getting worse. And it was specifically because of the news that broke over the weekend that Donald Trump, President Trump, ramped up dramatically the rhetoric about acquiring Greenland, about we have to have Greenland. Greenland has to become a part of the United States, whether a U.S. territory, whether a 51st state, and he kind of left hanging out there the possibility, at least, of going in forcefully and taking Greenland. I don't remember that any of his comments over the weekend specifically said he was going to do that, but neither did he say he was not going to do that. So the markets, they chewed on that news all Sunday. I think that news broke sometime Sunday morning, or maybe it was late Saturday. I don't remember. But they, the stock market sort of chewed on that news on Sunday, on Monday, and then Tuesday morning it opened and everything was way down, and it just continued to get worse and worse and worse throughout the day. Then yesterday morning, Trump goes to Davos, where they have the big economic forum every year with the world's super ultra elite billionaires and millionaires gather there to talk about, they gather there. This is just my take. They gather there basically to schmooze with other millionaires and billionaires, pat themselves on the back for how successful they are, and talk about how, they and only they can solve all of the world's problems. That's my cynical take on it. But Donald Trump spoke yesterday at Davos, and he immediately started talking about Greenland. And he said, as part of his comments, look, we're not going to use force. I know that's the first time everybody's hearing that. I have no desire to use force. We're not going to use force. We're going to use economic and political leverage. He laid out the case for why the U.S. needs Greenland. You can completely disagree or fully agree with his reasoning for why he wants Greenland and why he feels it's necessary. But regardless of where you come down on whether we should have Greenland or not, it was a big relief to the markets for him to say, we're not going to do anything militarily or with any kind of force to take Greenland. And so all of a sudden, the market started to rebound on that news yesterday morning. This was going on pre-market. So by the time the market opened, the Dow had turned from futures being negative, the Dow, the NASDAQ, the S&P, and all of a sudden futures were positive. And then it gained momentum throughout the day and didn't finish at its absolute high of the day, but wasn't a long ways away from it. So you can see, that yesterday, I know this is kind of small on your screen, but you can see that the market started up from where they ended the day before. They went up pretty strong throughout the day, came back down a little bit and finished in a much higher spot. And now today is just adding to that. Not quite as big a move up so far, but it's like I said, we're very, very early in the trading day. And the markets are so far looking very strong. The NASDAQ looks like it's gaining a little additional momentum. The S&P, not quite as much, but still a good, solid, very strong day for the S&P. Now, lots and lots of time for things to still trade. There's so much that can happen with the number of hours that are left in today's trading session. So it's a little too early to say this is going to be a great day and that between yesterday and today will completely make up for the losses from Friday and Tuesday. But we're already there on the Dow Jones. I think we're already there on the NASDAQ in terms of correcting. I guess the NASDAQ got a little ways farther to go. It had the biggest move of anybody percentage-wise on Friday and Tuesday, but still looking very, very strong to start today, and hopefully it ends this way. We have got a couple of things going on with our open trades that I want to talk about. The biggest is the triple play trade on Netflix. So Netflix reported their earnings. They had a pretty good drop following their earnings report. And then before the day was over, this goes back to Tuesday, before the day was over, or excuse me, I'm sorry, they reported Tuesday after the market closed. So yesterday morning, they opened to the downside, but before the day was over, they had come back. They were still negative, but they had come back quite a ways from how far down they were at the open. At the open, the stock was far enough down that had they stayed down that low, it would have literally guaranteed us a profit on our trade. And instead, they rebounded dramatically by the end of the day. You can't see it on this chart because it's hidden behind that huge volume bar right there. I know there's a way I could do it. I just don't know if I could do it fast enough to not force you to wait on me. But if we got rid of the volume indicator there, you would see that they came up a lot from how far down they were at their lowest point yesterday. Now, they're down again today, but they've still got about $2, about $1 from where they're at right now. They would have to go down another $1 to guarantee us a break even. They would have to go down anything more than $1 from where they're down right now would be profit in our trade. Now, we've enhanced that a little bit and increased that a little bit because this morning we took the call side of our trade. Remember, we had short call, long put, short put, all with tomorrow's expiration. We took the call side of the trade. We rolled it straight out. So the 90 strike long call went straight out to a 90 strike long call with next week's expiration instead of tomorrow's expiration. And the short call, we took it out 1 week, but we moved it down a couple strike prices below. So now we have a bear call spread for next week. I was fortunate enough to get 24 cents a share. I heard some other people got 22, 23 cents a share. Should have been right somewhere in the neighborhood of between 20 and 25 cents a share credit. So our original $3, anywhere from a $3 to a $3.10 per share debit, I think 310 is where most people, 310 or 315 is where most people were getting in. But let's say it was at 310. You subtract the let's just, for easy math, let's say 20 cents off of that. This is a credit that you took in. So now your total net debit is $2.90 a share. And that means with the put side of the trade is at 86 strike and 81 strike. So if you subtract 290 from 86, the stock would need to be down to $83.10. Anything at 83.10 or below would be a break even or a guaranteed profit. Now, that's assuming that we get to the end of next week and the bear call spread expires worthless. So that's where we're setting in Netflix right now. Now, I think between today and tomorrow, Netflix could easily go down right from where it's at right now. This says 83.93. From where it's at right now, it only needs to go down 83 more cents a share, and we would be at a theoretical break even. I think between today and tomorrow, there's a really, really good chance that that can happen. But if it climbs back up and finishes higher than where it's at today, and if tomorrow morning at the open, it's not falling pretty good, like at least 75 cents to $1, then we will take the put side of the trade and we will roll it straight out, but we'll keep the exact same strike prices. So an 86 strike long put, an 81 strike short put. And that way we create a situation where we give ourselves another week for it to go down. If you look at a chart of Netflix, let me clean off all these drawings right now. If you look at a chart of Netflix, it's down. That's what we're on. Sorry, that's the chart we're on. I think dropping down to as low as $81 a share will be a pretty easy thing for it to do. That's not a huge move percentage-wise from where it's at right now. Honestly, it could do that before the day is over. If momentum turns on the overall market and it starts to drop, something happens between now and the end of the day, either profit taking or something happens politically, or some event takes place and the market starts to drop this morning or today before the close. If that happens, Netflix could easily go down to 81 a share. And on the way down there, we might find that we could close the put side of our trade for enough money to virtually guarantee us a break even or a profit. Again, assuming that the calls that we roll out to next week expire worthless. So there's still a chance we could exit this trade today or tomorrow morning and not have any kind of a loss. And that's the hope. I'm barring Netflix really making a strong move back in the other direction. Barring it making a strong move back in the other direction, bullish today, I'm probably going to leave it alone today, and we'll make some kind of an adjustment or a close on it tomorrow morning. We'll either adjust it out a week like I talked about already, or we'll just close it out right tomorrow morning. So kind of sit back, be a little bit patient. We'll see what happens. But there's really nothing that has to be done with it right now this second. Okay, two other things that we need to talk about. Coin, we still have a bear call spread open on Coin. They continue to stay a little bit on the low side and drop. Staying at the exact same strike prices, I rolled Coin out 1 week, left the strike prices at the same place, and took in an additional, I think I got 23, 24 cents credit on that. And that was simply for the sake of assuming they're going to stay down and not rebound back up really fast, and just trying to cut down on our loss on Coin. Well, chances are at the end of next week, we'll let that expire worthless, or we'll close it sometime during the week. We'll end up taking a loss on Coin, but right now the goal is to narrow that loss dramatically, to really cut down on that loss. So that was the adjustment we made to Coin. One last thing to talk about, and then I'll wrap this up. Intel. This is a tricky one because right now, as we speak, Intel is trading with both of our call options in the money, and they report earnings after the bell today. So the challenge with Intel is, if we don't close this trade before the end of the day today, Intel could report some less than stellar earnings and you could see a drop in the stock, but will it drop down far enough to guarantee us profitability? I think if Intel has a big miss on its earnings, I think it's probably coming down to $45 a share or maybe even 44 or so. That's a big percentage drop, but I think if they don't have good earnings, I think that's what's going to happen. I think it will be a very big drop. The challenge is if it's not a big enough drop, we've got to have it go down to 46 or below on a drop. It's trading above 52 right now. And here's the plan on Intel. For those that may not have a chance to listen to this podcast before the close of the market today, I will also put something on Discord and probably send out an email as well. If before the day is over, we can get out of Intel with a break even or a small profit. I'm going to refresh this sheet right now. It looks like it's doing it already for me, but I'm going to let Intel refresh and see where I'm at. See, I show that we're down almost 1% on that, which is not a real big deal. But I'd prefer to not take a loss on it. I'd prefer to get a break even or profit. If before the close of trading today, I can exit Intel with a break even or a profit, I'm probably going to do so. And then after they report their earnings, let's assume they're bullish after the earnings report tonight. They opened the day tomorrow and they're moving to the upside. Then what I might do is open a brand new trade tomorrow morning, something like an in the money bull call spread for an expiration next week, and try and gain some profit on Intel that way. I'm okay getting out of this trade today at a break even, because one of the trickiest things when you do a long iron condor and you get the kind of movement to the upside that we've gotten on this prior to your catalyst event. I mean, yesterday was huge. Intel was one of the only stocks that moved bullish on Tuesday, and they started the day today lower, but they've moved up a little bit since then. So one of the worst things that can happen on a long iron condor is you get enough movement in one direction or the other prior to your catalyst event that when the catalyst event comes, which for us is earnings, and most of the time that's what we're trading around, when that catalyst event comes, then if you've got one side of your trade completely in the money, you worry that if the earnings pushes the stock the other direction, how hard would it be for it to go far enough in the other direction? And that's where we're setting with Intel right now. So with Intel, if I can exit my Intel trade today at a break even or better, I'm going to do it. And then good or bad earnings, we'll have a chance to do another Intel trade if we want to. We might see something else we like better, but we'll probably do another Intel trade, going into the early part of next week, or maybe even open a new one tomorrow if in fact we're able to get out of it. So we got into Intel for $1.50 per share. I would recommend strongly right now that everyone set a limit exit order just for today. Don't make it a good until close, but just set it for today for 152 to 155, so that 2 to 5 cents per share you get in addition to what you paid for it will at least offset your commissions on opening and closing the trade. I am going to set a limit close order right now on Intel for probably, I'm going to set mine at 154. I know that might seem like kind of an odd number, but I'm going to set mine for 154 per share to try and get out today. And whether on Discord or and it looks like I got in. I know these are the accurate prices. It looks like I got in at 152. I know we were right around 150. So maybe I'll set my limit exit order for 155, because if I can get that 3 additional pennies per share, I feel like that'll probably offset my commissions on the trade. So that's the plan on Intel. Now, if we can't exit it today, if we can't get out, we'll see what happens tomorrow. I think there's a better chance. I would be probably 70-30 that Intel is going to report good numbers. that they're going to be trading to the upside tomorrow. And that's going to make it really easy to exit our trade with a nice profit tomorrow morning. But if I'm wrong and they're going down, I just don't know if they'll go down far enough, fast enough to give us a guaranteed easy exit tomorrow morning. So that's and my apologies. I've been talking about this trade as though our expiration was tomorrow. The expiration is for the 30th. But that honestly doesn't change really anything I'm talking about, other than we may not have to roll it tomorrow. Still, it would have to drop a fair amount tomorrow and next week to give us a guaranteed profit if it trades to the downside. So it doesn't change the fact that I'm going to try and get out today if I can do so for a break even or a very small profit. But I was talking as though it expired tomorrow and forgetting that I set the expiration for the 30th. So that's where we're at. Everything else we've got open right now looking good. Not everything gaining today, but nothing at all that doesn't look good. Our spread trades, Nvidia is up today. Last time I looked, Amazon was up today. I think we've got everything kind of moving the way we would like it to move. Maybe with the exception of seems like one of the companies on our list that we have an open trade on right now was moving down a little bit. Coin, but we want coin to stay down a little bit. Walmart was down a little bit last time I looked. Yeah, and they still are. Walmart's down a little bit. So that's the only thing that we have an open trade on right now that's not moving in a favorable direction for us. I'm okay. I'm okay with that. Not a big deal. I'm not worried about Walmart at all. So we're looking good on everything else that we have open right now, and we're up to almost a 14% profit on the year. I just think all in all, we're looking good. We're in good shape on collars. We're in good shape on spreads. And I just went over the triple play trades that we're keeping a close eye on. So I'm going to wrap it up right there. I hope you have a great day. Like I said, depending on what happens between now and the end of the market today, if we end the day today relatively close to where we're at right now, doesn't have to be a lot farther up, could be a little bit farther down, could be right where we're at right now. If we end the day today in the neighborhood of where we're at right now, I'm not going to do another podcast today. If something dramatic happens, either a way bigger boost, a way bigger rally than what we've got right now, or if everything reverses and we flip to negative on the indexes, or even just give up a dramatic amount, a significant amount of the gains for today, if either of those two things happened, I will probably get back on just after the close and offer some short commentary on that. So with that said, I'm going to wrap up today. Everybody have a great rest of your Thursday, and I'll have a pretty normal schedule tomorrow and all of next week. Thanks, everyone. Bye-bye.